Philosophically, we always feel that few good people can do way more than many not so good people. The last 8-year journey of our startup has just been the title of this movie, which is one battle after another.
Crypto startups is what I call perennial wartime organization. Wartime guys will just cannot handle peace.
Compensation and just the level of cushioning that a company like Amazon gives can either be something that you become very used to or you reject. To me, Amazon was a dead-end place.
Edul Patel co-founded Mudrex, one of India's fastest growing crypto exchanges after his first startup was acquired by Amazon. Mudrex enables everyday investors to buy, trade and move cryptocurrency globally.
For thousands of years has been you either get equity or you take debt. Now you have somewhat a new instrument that is showing up. Do you think any business could be tokenized?
For the vast majority of businesses, I actually think it's a very bad idea.
Thanks so much for coming on the pod. I really do want to start with your early life and specifically from the perspective of starting your first company, Nifler, early on and going through these multiple acquisitions, right? And again, to me, the context is more to do with people, culture, especially when ownership changes hands. A lot of things change, and some of them may not really be positive. Some of them you'll have to orchestrate and so on. So just kind of walk me through your Nifler journey and to HelpChat and to Amazon. What happened with people and just kind of a quick overview,
Of course. So, we graduated out of IT Bombay 2011. Post that worked at Deutsche for a couple of years. And by 2013, was very, very itchy to start something of my own along with a few friends of mine. It would not have been the first time that we would have tried to do something of our own. Me and another friend of mine had done a small startup in like our fourth year of college as well in IT Bombay. That didn't really pan out to anything material, simply because the early team that we had got set up just didn't work out, right? So in 2013, we just decided to leave our job, start Nifler. We clearly thought that both hyper-local and mobile and the intersection of the two was a very large opportunity and wave that we should participate in. And Nifler was kind of a local offers, deals and discounts platform, but the idea was to create a media product that consumers and stores can, do a lot of give and take around. So That's what we went fairly deep into. Eventually ended up raising some capital after a couple of years. Had a very deep relationship with another partner. That partner really wanted to build the infrastructure that we had already built. They had got a lot of capital from Sequoia back then. And it just felt like the right thing for us to do was to, get acquired by them. And it was a reasonably good opportunity for us. By that time, we had about 25 to 30 people in Bombay across a mix of sales, operations, technology, etc., etc. And of course, Tabzo, which was earlier called as HelpChat, ended up acquiring us in September, October 2015. One key thing that we wanted to make sure when the acquisition happens was that every member in our current team finds a role and place in the new team.
Great.
Fortunately, we managed to be able to do that. And I think that was also a consequence of the fact that Tabzo was growing and everything that we had was very complementary to what that built. So it was very useful and valuable that way. And we're able to move everyone into the new team. And I would love to say that as far as my understanding is that we were able to integrate the new team also into Tabzo and HelpChat really well, considering that on an average, people ended up staying there for about a year and a half post the integration that happened. Okay. And I think a lot of that alignment, and also because why I feel that acquisition, at least from our side and their side, both was fairly successful, was that at the core, the teams were very aligned on culture and values. And those broadly are what do you want to do and how do you want to do them? And under what principles do you execute them? And I think that is what made sure that the team continued to stay alive. In both cases, there was that general hustle-minded culture, the culture of growth, the culture of figuring out problems, trying to solve for those problems, and then continuing to take them ahead and continuing to push the envelope. And of course, for a lot of folks in our team, they suddenly went from like a 0 to 1 scale to a 10 to 100 scale, right? So the challenges of running a company, building an organization, scaling the organization up at both of those levels is different. And
So how big was Tapso compared to Nifler? Several times, in terms
yeah,
of
yeah, easily. Like when we joined, Tabzo was already like a 150 member org. We were like a 25 member org.
Okay, and then Tapso got acquired by Amazon, and that took how long?
Tabzo got acquired by Amazon much later. I was not a part of the acquisition. I known that something like that was going to happen. And to me, Amazon was a dead end place. And by then, again, the itch to start something of your own came calling. Right? It doesn't stay away for very long. And that's why I left Tabzo in December 2017. Jan 2018 is when we started Mudrex. Tabzo got acquired fully by Amazon by 2019.
Oh, okay. So this journey from Nifler to Tapso to Amazon, for those who continued, almost seems like, you're in a small cap, you go to a mid cap, and now you go to a large cap, right?
Yeah.
So how was did people, when I say people, I'm talking about employees and, founders and so on, right? Did they make a lot of money? Did they make some money? I mean, from what happened from a wealth perspective for them as individuals?
The outcomes are, of course, different for everyone, right? For a few people, the outcomes are really good. In terms of, for a few people, it might be life changing. For most people, at least even in our case, when Nifler got acquired by Tabzo, I don't think the outcome for us was life changing by any means, but it was definitely an outcome that was, in my opinion, way better than an opportunity cost of doing it. So it ended up being a reasonable. Being a reasonable bet to take and a reasonable outcome to get. Not an outlier outcome that you dream of, but outlier outcome are outlier anyways.
Correct.
So the outcome was reasonably good. I think for Tabzo also the similar thing happened, and more so for Tabzo, actually a lot of the folks who were there, their compensation and just the level of cushioning that
everything changed.
Like Amazon gives once you're into it, can either be something that you become very used to and just get absorbed over there very quickly, or you organ reject immediately.
Leave very quickly.
And you move on, right? Like, for example, for me, it was an organ reject immediately. I don't think I'll be able to survive in a place that operates speed. But for a lot of people who've been, working hard and have been at it for 5, 6, 7 years, sometimes it's okay to, let's take a pause, let's take a breather, let's see where the world is going, and maybe jump back again later. So I think it was a mix for everyone. And eventually, I don't think any of the outcomes are outlier outcomes, but were people reasonably satisfied, or were the outcomes better than what their opportunity cost would have been? Yeah, almost surely true for everyone.
Yeah, that's actually fantastic. In fact, for a lot of employees, we kind of look at, did this change something in their lives? May not be like earth-shattering, as in you don't have to work anymore kind of stuff, but did it change something meaningfully? And for founders, one of the things we keep jokingly talking about is, did it give you seed funding for your next startup? Yeah. So because so looks like you started Mudrex even before the acquisition got completed, right? So you said you didn't want to be part of it, and you started. But in terms of how people viewed it, because this looks like in your case, unlike what happens generally, these steps seem to have happened quite quickly. Because, Nifler, and in 2 years you got into HelpChat, and another 3-4 years you got into Amazon. Usually acquisitions don't happen that quick. So I think it's a very positive. I'm sure culturally it would have made some sort of a difference. I mean, I don't know if how many of them followed you into Mudrex.
Oh, so my co-founder from Nifler was my co-founder in Mudrex.
Fabulous.
Yeah, that's as good as it gets, right? So it was good, I would say.
Cool. So let's get into the Mudrex or the crypto world right now.
Sure.
And this is where I think it gets like really fascinating. I know what you guys do right now, but is that how you started when you started? Because especially with crypto and India and all the stuff that happened with exchanges, security problems, and
Absolutely.
so there's a lot of events that happened,
Yeah,
so
yeah.
to
So
speak, right?
it's been about 8 years now that we've been doing Mudrex. And I internally joke that this is probably the fifth company that we are on inside Mudrex.
That's a
Um,
good way to put it,
and
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 I'm sure I don't know the history, but I'm sure one of them would have been trying to be an exchange.
yes, twice.
Okay. Oh, cool. Okay.
So
Nice.
so let me maybe I can just quickly walk through how we evolved and what all we've done. Right, like we started off in Jan 2018 with the idea of building uh, an exchange for India and for Indians, growing and scaling that up. Raised some early commitments, or I don't want to say raise capital, got early commitments, launched an app, got our first 1,000 odd alpha testers in like a week of launching, and also in a week of launching, the RBI comes and bans crypto in India in April 2018. So, of course, if RBI has banned crypto, you can't do anything. There's no business, there's
Right.
no opportunity. But really,
You
we're
you you, you didn't you didn't go to Sikkim?
no. Uh,
Sir, you remember the trick a lot of people tried?
yeah,
Yeah.
yeah. So in 2018, then just decided that crypto is something that we still want to do, and instead of and okay, if India at some point will come around. In the meanwhile, let's build something globally. So that's when we went on to our second iteration of building a trader-focused algo trading platform for crypto traders. The idea was that
Wow.
crypto is 24/7. It's a global product, uh, a very high volatility. Manual trading is nearly impossible. It's extremely draining emotionally, and letting a bot do all of that for you is much better. So we created this suite of tools that can help traders automate their trading strategies. We did a bunch of those things.
When was this?
This was 18 to 21, I want to say.
Okay.
18 to
Okay. So
21.
just right after the ban.
Right after the ban, pivoted
Okay.
immediately. In the middle of that, got into Y Combinator, scaled this product up, scaled it globally, got to about $1 million odd dollars of ARR, and then in 2020, the Supreme Court overturned the RBI's ban, which was
Right.
great news. So 2021 started focusing more on building products back for India. Felt that what we would want to build is actually investing products and not trading products. So focused on a very unique product called as coin sets that we launched, which was built along the lines of index funds for crypto. So launched that in India. That grew and scaled up fairly quickly. Went through the 21-22 boom bust cycle. In that period, because we were building investing products, started managing institutional capital, launched a delta neutral crypto fund.
Wow.
Also, that work for global family offices and global HNIs and help them manage their funds. Grew that business overall. And then by 22, 23, as we were in peak bear cycle, we could clearly see that, okay, now crypto in India is here to stay. By then, we had clear tax, clear taxation rules. The FIU licensing process was in place. So at that time, just paused the algo product and then started doubling down and focusing only on India again as an exchange back. So started building Mudrex, the variant of Mudrex that you see now. The seeds of those were sown probably in somewhere around December 22, early 23, where we started building this full-fledged trading experience for users. So you can, at this point in time today on Mudrex, buy and sell about 700 different tokens, trade in 500 different derivatives products, invest in 30 different index products, do all of that instantly from your bank account, deposit and withdrawal at lowest fees in India, and getting access to our excellent customer support and experience. So that part, of course, has grown significantly. But in the meanwhile, crypto also has evolved, and crypto
Correct.
has, in my opinion, now gone much beyond just trading, investing to almost now becoming this new OS for financial services, especially with stable coins. And we, of course, were in the middle of it as all of this was happening. So we recognized the potential for stable coins also about a few years ago. And that's when in about December 23, we launched another business line inside of Mudrex called as Sabre.Money, which is a global stablecoin based cross-border payments and remittance infrastructure. So
Wow.
typically money movement using Swift takes days, charges cost 3 to 5%. And India, actually, it's typically better because India is relatively well connected. For most developing countries, most global south, it's actually extremely bad.
Yeah, but the fees are still high even with India, right?
Yeah, in India, the fees are still high, and it also takes a lot of time. So in India, on an average, takes about 3 to 5%, 3 to 5 days to get money.
Correct.
But instead of this, if you use our infrastructure, the stablecoin infrastructure that we've built, monies move under a minute. Like 93% of our transactions complete in under a minute from one bank account to another bank account, end to end, and the costs are like negligible. It's 50 basis points or something like that. So
So the revenue model is fees. Is that
revenue
how?
is brokerage? Like it's,
Okay.
at the end of the day, the core of brokerage business.
Hmm.
But the user value prop is immense. It's order of magnitude faster, order of magnitude cheaper, and just works. It just works all the time. And the same infrastructure that we built for India, we've also scaled to UK, Europe, Philippines, Indonesia. We're licensed as a money services business in UK, Europe, Canada. We're acquiring similar licenses in Southeast Asia. So really, growing the Sabre business is a global payments and cross-border payments business more so as stablecoins rewrite the financial services OS of the world.
So this would require you to connect to the banks in India in some particular way. So, for example, most of the remittances that you see, which is non-business remittance in India, is largely people paying school fee for their children studying abroad,
So,
right?
let me clarify. This is all inward, not outward. So it's
okay.
mostly money is coming into India.
Okay.
In which case, it is actually family maintenance. It's you wanting to buy a house or something like that, right? And
Correct.
Vast majority of cases, it's your own money that you want outside that you want to send to India as an NRI, park into your Indian account so that you can then invest in India, either in the equities market, the real estate market, or pay for family over here.
So whatever is happening in the Gift City world, would that help you, hurt you in any way?
Gift City, we've spoken to. It's a bit too early yet.
Okay.
Having said that, we are excited with the opportunities. So we are trying to figure out how well we can orchestrate. Unfortunately, India is still behind most countries in terms of recognizing the utility of this new blockchain infrastructure for financial services. And we are still, I think, very jarred by the entire investing and trading use cases of crypto. So I think India will still take some time, but the rest of the world is moving incredibly fast, fast.
Correct.
Like, just to give you some sense, Australia just announced a new license, so we are upgrading our license in Australia. UK is going to come up with a new licensing regime in April. It will open up the doors for submission in June, so we are going to go through that new regime over there. Hong Kong has a new money services license. Singapore has a new money services license. Euro, of course, has MiCA. So it's changing rapidly world over. And world over, it seems like crypto businesses are more becoming like money services businesses, which they always should be like, because it's a money services business. Like at the core, I don't remember if the cross-border use case is mentioned in the white paper or not, but it has always been thought of as a key use case of crypto and blockchain. And that's what we are doing now.
Absolutely.
So we went from an exchange to an algo trading product to a fund to an exchange to a payments company.
Cool. So let's talk about the people through this journey. How many people are you, and what is the growth of the people in the organization? Can you tell us a little bit about that?
So philosophically, we always feel that few good people can do way more than many not so good people. So we tend to
100%
always hire the highest quality folks, always keep our teams very lean, and make sure that they get growth. Either they get growth in terms of the kind of things that they are doing, the objectives that they are trying to fulfill, and just satisfaction that they are personally getting in the sense of working with other really smart people. And then of course compensation, etc. Growth is an outcome of all of this that happens as long as the business is growing and the company is growing. So we are now an 8-year-old company. On most of the people that we've hired, actually, let me put it this way. We're an 8-year-old company. For the first 4 years, we were just a 12-member company. And most of the people that we've hired are about 4 odd years ago. Most people don't leave Mudrex and go. We don't fire most people as well. The average tenure of a person right now is about 3.5 years. So it's effectively been as long as most people have been hired. Our oldest member with me is now about 7 years old. Another few are 5.5, 6 years old. So they've literally gone through and we've seen the entire cycles, all of it together. And I think with crypto, it's always, one battle after another, right? Like you're always doing one thing and then another thing and another thing. So there is a lot of excitement and a lot of opportunities that you can continue to go after. And every new opportunity is an order of magnitude larger time and an order of magnitude larger growth opportunity for the company. And I think that's what keeps people motivated and excited. And plus, like most people in reality just want to work with other really smart people. Everything else is fine. Like, of course, you want good money and you want compensation and you want growth in life, but almost always on a day-to-day basis, most people just want to work with other smart people. So, or most smart people really just want to work with other smart people. And that's what you try and ensure happens.
Yeah, I mean, crypto startups is what I call, a perennial wartime organization, right? You just, there's no peacetime at all.
Yeah. I was jokingly saying that I'm not sure if you know this, but there's a movie from Leonardo DiCaprio that came out called as The One Battle After Another. I was jokingly telling this to my friend that the last 8-year journey of our startup has just been the title of this movie, which is One Battle After Another.
Yeah, I know the reason I mentioned that specifically is, at least in my experience, I've clearly seen, wartime people and peacetime people, right? And you mix and match them, you're going to have a disaster. Wartime guys will just cannot handle peace. They want to be breaking something and building something all the time. So let's, I have a connected thing to talk about, which is, you talked about compensation, right? But crypto, by its definition, has ushered a new form of economics in many ways, what we loosely call the token economics, right? Now, and all this stuff about what happened in 2018, the 17 to 19, the ICO boom, where you were looking at creating tokens, and the tokens was sold to bring in money. Typically, the structure of raising money for thousands of years has been you either get equity or you take debt, right? Now, you have somewhat a new instrument that is showing up. Now, when it comes to these new token and token style of economics, a few fundamental questions. Do you think any business could be tokenized, or you have something where if you're going to create something like this, it's only for the financial world, or this is only for a certain type of companies?
No, I actually think most businesses should not be tokenized. It's a really bad idea. It's actually a really bad idea to issue tokens for your business, simply because, like share price, token suddenly gives a very objective worth to your company. And in a lot of early stage periods, that can be misleading, demoralizing, unnecessarily diverting attention from the actual real problem of building the business. It's like that number might represent anything, and you will always be dissatisfied. It's like everyone's Bitcoin story, right? My number, it might represent anything, and you will always be dissatisfied. So for the vast majority of businesses, I actually think it's a very bad idea to issue tokens, barring a few kind of businesses. And those kind of businesses are almost always network businesses, where you want network participants, or where you want a large number of network participants to make sure that the business is successful, and the business is nothing without the network. And you also want to create some incentive mechanism to incentivize the early network adopters who early on actually aren't getting as much as value from the network as like a much later on adopter to the network might do. So in those kind of businesses, token economics makes sense, where you want to incentivize token holders, you want to get them on board, you want to give them something worthwhile economically and monetarily, but not and not just do lip service and do true justice to them. But in almost all other use cases, it's really pointless, I feel. I have nothing to do with it. That's why we actually never token in Mudrex. We never had the objective of doing something like this. We just felt that it's a distraction and it takes you away from the core purpose of what you're trying to solve in your business and the value that you're trying to add in your users' lives.
That is true. But where I'm going to is if you kind of look at the early stage of this entire ecosystem, right? One of the things was you wanted to make sure that there is a community that's involved in building this, and how do you reward the community? And the community said, "Hey, I don't want traditional reward. I want the token style reward,
Correct.
right?" That has that kind of gone away, or do you still see that?
I think that is definitely still there. And I would say
Okay.
that actually, like, it was less driven by community to say that, okay, I want to participate and help you build the company. It was more driven by community saying that I want to participate and get access to upside. So it was more like, it was actually very early on, the very early first few companies that did the entire token wave. And then there were many more that came in. The idea was that you should be able to raise capital from many, many, many individual investors instead of one. So it just, and that actually really opens up and builds your community. So creating a token and launching a token was a community creation project and not a project to incentivize an existing community. What companies thought was that they would be able to create a large community that would help them bootstrap their network or help get early access to early users. And that was the real thought process. Like, I think one of the most successful token issuances of all times are actually the Binance token, the BNB token.
Right.
Like, BNB raised its first round of 15 million, I think, by issuing BNB tokens. And at that time, it was what they used those BNB tokens for was to get people to use the Binance exchange. So the token was issued, it had a price, they were able to raise capital, and the utility to token holders was that they would be able to use it on the exchange. And that created a very, very positive, vicious loop that incentivized that, okay, the company is growing. If the company is growing, then the token usage is growing. If the token usage is growing, that means the value of the token will grow. And of course, the equity of the company is very separate. That will grow always. So
correct. I mean, largely you would map that to any company which has got the concept of a loyalty attached to it, where repeated usage could improve the business and whatnot, right? So it kind of looks like it came from there. But again, coming back to the original question, so what kind of business? Let's say I'm building a consumer style business where I do want to award for being loyal. I do want some sort of a loyalty, right? Would this be a good method to natively start out, saying, let me create some mechanism of?
I mean, it helps, but it really doesn't help because, like, if it's loyalty and it's closed loop, then you can just give cash, right? Like, why give tokens? Doesn't help. And if it's so, let me actually rephrase this. Like, there is this concept of Web 1 companies, Web 2 companies, Web 3 companies. So Web 1 companies are effectively these classic companies, which are effectively like just a store. Like, I am creating something, you are consuming something. Very classical Web 1 company. Vast majority of businesses in the world are Web 1 businesses. There is a creator of value, there is a consumer of value. Okay. Web 2 companies are effectively the Facebooks and so on and so forth of the world, where there are a large number of creators. The company is actually creating a platform that enables more creation and then more distribution of whatever the creators are doing. Amazon Marketplace, Facebook, Instagram, effectively every social network, every marketplace company in the world is a Web 2 company.
Right.
And Web 3 companies are companies where the share of value created by creators is actually much larger. So as a result, you would want a large amount of value to go back to creators. And if you look at the origins of Bitcoin and the origins of this entire wave, the origins were deeply rooted in this philosophy that these Web 2 companies are effectively acting as a very large gatekeeper and are extracting away just too much value from the ecosystem that they should not, and more value should go back to the creators from the consumers. And the idea of tokens was actually true there. So if you're building more of a Web 2 company where there is a creator set, a consumer set, there is some relationship between the creator and the consumer, and you want fair pricing and equitable distribution of wealth from creator to consumer, while you are able to take the right share out from the ecosystem for creating certain value, then I think tokens make sense. But there are very few companies.
Which is kind of true with a lot of modern marketplaces, right? Because you are acting as a
It's true for every market.
Correct. So if you are and most marketplaces, are anyway centralized, so you have the power to, manage distribution and a lot of things. So just a, theoretical question, right? Do you think it would be better if a company like Uber, is tokenized? Because again, you have this whole thing of you're paying 20%, to the gatekeeper. Now you had different marketplaces coming. At least in India, you have in Namayatri and so on and so forth, where you don't take a larger percentage of, the fee, where the platform's job is only discovery. And in the financial world or in an exchange world, you might want to call order matching as a valuable concept. Here, there is no actual order matching as well. The pools are open on both sides, right? Both consumers and drivers. Yeah. Now, is that a good kind of company where tokenizing would be better for the participants, versus what it is now?
Actually, if you think of it, Namayatri is built on ONDC, which is
correct. Which is some sort of
This is exactly what you were saying. It's effectively a tokenized variant of Uber, where the only difference is that the creator product, the consumer product, etc., is all customized. The business model itself is not via the exchange of tokens. The business model is now Namayatri does subscription and they charge the creators, which I think is a great way of just rewiring Uber's economics so that you get the right share. So there are, and that's what I'm saying, where things are different, right? Like whether you issue a token depends is a very different statement from how do you do the economics of the business and whether the underlying business should be tokenized. A lot of underlying businesses should be tokenized. Like for example, I'm a strong believer that most marketplaces should be public, permissionless and open, and then you should be able to create front ends on top of those marketplaces, because almost all marketplaces are liquidity drivers. You want liquidity to be concentrated for best matching, and then the front end consumers should then be able to create whatever they want to. And in the olden days when Twitter just had an API and you could create your own Twitter app, and Reddit just had an API and you could create your own Reddit app, this actually worked very well. Like there were so many really good Reddit front ends and Twitter front ends that it helped that did offer a lot of value to users.
Cool. So let's come to the employees and how it impacts employees, in these businesses that could probably be tokenized. You did mention that Mudrex doesn't have a token, but if you take a typical, crypto company, which is again has a governing structure, it is centralized and so on as far as governance and equity is concerned, but there are also native tokens. Now, what do you think in cases where the business is tokenized, there is economic value captured by raw token? What do you think is the right way of compensating employees? Should they be token holders as well? Is there motivation for doing it?
So, okay, here I have a slightly different perspective to this. So, I believe, let's say you're working in a company and you have ESOPs in that company,
right?
And your company goes public. The moment your company goes public and your shares are worth something, your choice of not selling those shares is economically equivalent to buying that amount of shares from the market as well. Because you got shares, you could just practically sell it, you could get cash, then you can choose to buy back the shares, or you can choose to buy anything else.
Right.
So best decision making actually happens in the way where you actually have cash and then you are making the active choice of buying this token or not. So should employees have the ability to buy in more of their company equity? Yes. Should employees get only paid in company equity? Probably no, because there are just so many other things that an employee wants to do with capital.
Right.
And can it be a mix? Yes. And the mixed model is the ESOP model or so on and so forth that a lot of people do get access to, and a lot of people make life-changing capital if ESOPs materialize and get to real value.
So where I was getting to was, that's typically how all modern startups operate, right?
Yes.
You have an ESOP pool, and the ESOP pool is distributed among employees,
Right.
and then the company gets to a stage, everybody kind of, makes some wealth. Now,
Right.
one of the things that we all know now is that unlike 15, 20 years before, almost every company takes a minimum 10 years of time before it gets to some stage, right?
Correct.
Now, and one of the things that we see is, who are the people who build these companies? They are practically probably, in their mid-20s, late 20s when they enter the company, and they're in their mid-30s when they think some value should come out. Now, this is an age where a lot of personal life changes are going on. Your monetary requirements are changing, and so on and so forth. Now, for somebody to say, yeah, you are in a startup, you get this ESOP, and at some point in time, it'll get liquid, is an issue. So you end up building liquidity programs to be able to cash out something, right? Now, one of the fascinating things for me in the crypto world, especially if you're native and you have a business token, would it work if you have your cash that runs your house, you have your big upside that's dependent on your ESOP, but there is something that is increasing in value and is liquid enough that if you had access to those, then your liquidity constraints or the liquidity load on the company having to provide on ESOPs gets kind of balanced out because I have some amount of business tokens, that is generating some value for me. Does that sound like a good idea, or it's?
I absolutely agree with it. Like in reality, in ideal scenario, what should happen is that, we'll have to probably go back deeper into the origins of currency and money, and
Right.
why money is valuable, and how it makes sense to really answer the question that you are saying. But like, think of it this way, right? Like, most money was to simplify barter because people originally just owned things that had value, and then we created this layer that said that, okay, let's use this money to exchange goods because it just makes things easier. The problem with money is that it is short. It has one very specific value, which is that it's supposed to be a medium of exchange and not a store of value. So if you're holding cash,
correct,
in the longer run, you're actually end up losing money, right? Because it's supposed to be used as a medium of exchange, not as a store of value. The unfortunate reality is that most things in the world that are stores of value historically weren't liquid enough. And as they weren't liquid enough, you had liquidity as an additional risk, and that's why people just chose to hold cash. But in the world where we are heading towards, I think this fundamentally gets decoupled. And that's actually where I said that blockchain and cryptocurrency rewire what a financial OS looks like, right? I believe we are heading towards a world where all of us will hold less and less cash, to a point where we should actually be holding zero cash, operating day to day using credit which is backed by assets that we hold, most of those assets being liquid enough on a fair, public, open global marketplace. And if we are able to move to that kind of a place, then we can truly solve for liquidity requirements, financial constraints, growth opportunities. Because in reality, capital unlocks capital, and that helps you grow. And locked capital is least useful. Like, just to give you an example, 80% of America's wealth or wealth of Americans is illiquidly stuck in houses.
Right.
Like, it's ridiculous.
I was going to say that,
Yeah.
And real estate will never be liquid in that sense, right? I mean, you can have a digital version of real estate, just like you have the digital version of gold. But these are assets which are by definition illiquid, from that sense.
And in reality, a lot of these should be illiquid, but having digital access to them enables you to access credit on them liquidly, correct, which solves for a lot of problems. So I would actually frame the solution to what you were trying to say, not in a way that, okay, you can have business tokens and those business tokens are sellable, and you can get something for it, because I actually think that's choosing the wrong. Most people should not be looking to solve for their short-term liquidity requirements by selling long-term value-creating assets. Like, business tokens are long-term value-creating assets. If you're choosing to sell them today to serve for your short-term liquidity requirements, you are actually losing out on a significant upside later on. So what
No,
you
but
should
there
be
is also a downside risk, right? Especially in these
of
instruments,
course.
and especially in the case of startups and young companies that are growing. I mean, you don't know what the eventual end state is.
No, I completely agree that there is a downside risk. But like if there is a downside risk, most people would not care about those tokens anyways. Like or
Mhm.
those if you also need to think of the consumer psyche, right? Like when someone is buying a token in an ICO, let's say, so that we
Right.
can talk about the extreme end and everything else is a derivative of that scenario. When someone is buying a token in ICO, they are not thinking that this company will go down.
Hmm.
So although people understand the downside, but they absorb the downside in the price that they are paying for when they are buying the token, right? Just like how probably you did when you decided not to buy Bitcoin in 350. You said that it could go to zero. Why do I even spend 350 behind buying a Bitcoin, right? So most people absorb the price of the risk of downside in the price that they are wanting to pay for something that they want to buy. And once they buy it, no one ever thinks of it from the perspective that okay, this is going to go down in value. Everyone, if they are holding, only think of it from the perspective that it's going to go up in value. And when I say everyone, it's most retail users. And that's an inherent psychological bias that all of us have.
No, but
Like we are not,
that's where portfolio management comes in, right? So I know I have some risky asset, some not so risky asset, and so on. So this is risky. I agree mentally that you're probably not prepared for it to go to zero, even emotionally, and you're probably not expecting that to happen. But that's exactly the reason why this allocation stuff gets peddled, saying, "Oh, this is risky, so don't put more than 20% of your net worth,"
right.
and so on and so forth. But do you think an employee who's wanting to work in these places, which is I'm just using that as a like a as a reference point for the larger
Yeah.
consumer base, but a lot more educated consumer base working in companies like this would have as sophisticated a thinking as that,
No, actually not. And most people would just want to fulfill their liquidity requirements if and when needed. And to
correct,
fulfill
exactly,
what they would want to say that okay, I've spent so much time. Like let's say for example, someone at Mudrex, right? Like who spent maybe 6 years. For them, a bunch of vesting ESOP grants would have already been vested. Some would have already been in the pathway. And it's fair for them to think that okay, I've spent quite a bit of time. The company's value has grown. Maybe it's time for me to take some chips off the table, and that's
correct.
completely fine. And that's something I think everyone should have a better access to. I think having access to be able to buy and sell equity of your company in secondaries is incredibly valuable, and we should have a more vibrant secondary market in general. But after a certain point in time and after a certain stage of the company, prior to that, it's all very hazy, and people might just end up making the wrong choices.
So what would you set that as a company for a company? What would be the stage where you said, okay, let me start looking at doing some liquidity? Is it connected to the number of years, stage that you have reached? What would that
It's
pointers
almost
be?
always a mix of number of years, number of people who have such equity, and some, let's say, business stage that such a business has reached, right? Like in terms of how much revenue is it generating, how fast is it growing, because then only you can do a fair assessment. Otherwise, it's just okay. If, it's an RFQ mechanism. Then just going and saying that hey, I am someone who's looking to sell. Is there a buyer? If there is a buyer, I'll
Mhm.
just see what is the quote, and if there's a quote, I'll sell. But that's not a fair secondary market. And what you want to make sure is that there is a liquid enough fair secondary market where people can do this.
Yeah, but, and again, my context is coming from, if you are a high growing startup and the people that you want to hire, obviously some of them would be built organically in the company, start when they are young and so on. But if you're doing lateral hires and you have to, let's say, hire somebody from the big tech, right? So the number of RSUs in a publicly traded company is a very hard instrument to fight against, right?
Yeah, it's
So
impossible. I've
yeah.
had so many fights for that of late.
So in fact, part of our thinking when we started this ESOP liquidity fund was exactly to bridge that gap to say, okay, you have a third party institutional investor who's coming in, who's going to value the company appropriately and do it in an organized way. Then a random, like you mentioned, some random buyer, random seller trying to figure a match, right? But
Yeah,
in the context of most high growing companies wanting at least to hire some set of team members from experienced places and so on. Do you think of any mechanism in which this liquidity could be structured, or do you kind of say, okay, let's pay them cash? What is the compensation philosophy that you think would, work? And we could take a company of your type, where you've spent, 3-4 pivots, so to speak, defined pivots. I don't want to even say pivots in that sense, but spent a significant amount of time. There are people who spent enough, time in the company. And because we are constantly fighting this hiring problem from big tech or little more established companies where liquidity is real because they're already listed.
Correct.
So what do you think of in terms of the compensation philosophy itself?
No, I think I completely. So let's talk about what is the philosophy at our end, right? Like we strongly, at least in our company, we strongly believe everyone should be an equity holder. So even if they are a customer support agent, there is some amount of ESOP that they have.
Right.
And so it's true for even the highest, let's say, senior management that we might
the right approach.
Right. So that's what we want to make sure happens, because that inherently incentivizes everyone to do the right thing. Now, when you have to compete with RSUs of a public company, which effectively are as good as cash, what you really should be thinking of is that, okay, this person's compensation is this much amount of cash. And then they should be able to, and then they should, when you are effectively pitching the company to them, of course, ESOPs are a part of it. And then you should be able to convince them, or they should be willing to take the bet on the company that, okay, if I am coming in, then I will help grow the company, and as a result, my ESOPs will be of material value. And hence, this RSU dip that I'm taking is worth it. And for a lot of people, that actually is the bet that they should be taking, and it works both ways, right? Like for senior managers that you hire, and I'm assuming you're talking mostly about senior managers. When you are hiring senior managers, people with responsibilities, they should come with this conviction that I will be able to move the needle, and as a result, the ESOPs that I'm getting are valuable. And this actually, like for example, in our interview process, is a clear marker. People who argue and negotiate for ESOPs, it's like a clear green flag. Okay, you're valuing something that's valuable, and if you don't talk about it, don't negotiate on it, don't discuss it, then it's about either you don't know or understand the concept, or you don't value it, or you know and you really are using this offer just to fish for another offer, for that matter, right? But so that's my thinking along those lines, that it's hard to compete with RSUs. If your company's ESOPs were liquid with, let's say, what you guys are trying to do at ISA, there would definitely be a way to answer to most such employees, because then you're able to say that, okay, I have ESOPs, but as soon as the ESOPs vest, hey, there is this liquid pool that's available from which you can access liquidity at any point in time, and not just wait for the company to have a meaningful outcome, because meaningful outcomes are fair and far away in between, and it's very hard for most companies to organize any kind of liquidity events.
Cool. Let's shift to a slightly controversial or a very interesting part of the crypto world, which is the entire decentralization of everything, including setting up decentralized organizations, right? So what's your fundamental thought process on that? What does it alter as far as ownerships are concerned? As far as wealth creation is concerned, would a decentralized organization be less economically interesting for a certain set of people, because it's now trying to make sure that you have a different form of setup, because once you are not centralized, then your power begins to reduce as well, right? So kind of where do you see that?
I actually think that barring NGOs and trusts, decentralized organizations are a really bad idea.
Mm-hmm.
And that's just my opinion, because what you really need very early on is very clear vision, very clear focus, and really early on that founder energy to get it pushed and get things done. And that's what really builds companies. And that does not, and you may have a democratic setup in your organization, but that seldom leads to outlier outcomes. So for most people who want outlier outcomes, they need to put an outlier effort and need to be able to get outlier outcome. Need to be able to get the opportunity to create outlier wealth as well. So I actually think that decentralized organizations are a really bad idea for most cases. Just like how I think having a token for a company is a bad idea for most companies, uh, because it requires a very, very clear vision and very, very clear focus, and the ability to do that really fast, very early on in the life cycle of organizations that are profit driven and want to capture a business opportunity. Uh, so yeah, that's my view. That does not mean
But what are
that,
the
that
origins?
that actually does not mean that incentive structures can't be made better. Incentive structures for people can definitely be made better, and the right format of the correct incentive structure is to allocate some format of equity to folks. At least when you're
But that's where the problem is, right? You know, the governance structure is lopsided, and that governance structure is what is setting up the incentive structure. So
yeah,
if so
that's fine.
so in that sense, if I don't trust my founder to do the right thing,
Then
you
you
know,
should not be in the company.
exactly. So you are coming down to almost like a binary solution here, right? I will work with this kind of companies, and I will not work with this kind of companies. But for most regular employees, it's very, very hard to make that distinction before you get in. People
Correct.
get in, don't like it, and leave, and so on. That's almost like you wasted a bit of your time, right? But in
Correct.
terms of, if I were to look at a company and say, okay, I want to understand a few things about it before I decide should I be joining this company or not. And a lot of times, early startups, you have this godlike figure in the founder, and it can be, and we all know it can be media created and so on and so forth. So you don't understand enough about the company to make this decision of should I join or not. And as far as I recollect, the DAO stuff was as much about centralized governance as it about, or more about centralized governance than about central economics, right? And I mean, sorry, decentralized economics. And just because now you have decision making decentralized, and hopefully that will result in better decision, including, incentive, decisions. So you don't see that kind of naturally aligning.
No, I actually don't. In fact,
Okay.
let's talk about some successful DAOs that are out there. Right? I think
Right.
actually that the Ethereum Foundation is an extremely successful DAO that sets out goals and objectives, where the goals and objectives are still set up by very few people. Like Vitalik Buterin tells that
Correct.
these are the objectives, right?
And a lot of people don't like him as well.
Who is a godlike figure who says that, okay, I will do these things. But in reality, the things that get picked up come via something called as an EIP process, an Ethereum improvement proposal process.
Correct.
That drives the creation of and adoption and improvement of Ethereum and the distribution of Ethereum and so on and so forth, right? But in reality, the Ethereum Foundation works as a non-profit. It acts as a non-profit for this vision of growing and scaling Ethereum out. That kind of an approach is very different from how most startups work, where the focus is very short term, where most companies are going through 5-6 pivots through the course of their life, and it really takes 10 years to build a meaningful, valuable business. And over there, I feel that too much democracy actually leads to decision paralysis, because it almost always leads to the fact that, okay, we do not have enough information, maybe we can wait and watch and get more information, and that slows you down, and that slows things down, and that is in reality what kills most companies. Like speed kills most companies than bad products, like poor execution. And that's what becomes very hard when you're in this DAO kind of a structure, especially if the DAO is just too much big, and while you're going after one very narrow.
Fantastic. And again, I don't understand enough, haven't spent enough time on DAOs as such to see where it would make sense. But as a concept, it sounds, technically fascinating to, open up and see, where it can help, and so on. So let me come to the final few parts of what I wanted to get to is in terms of, any organization building, and so on. You've done it several times, gone through the acquisition route, seen stuff there, and now this company is getting mature, by the day. But if you were to build today a company that's going to last like for 20 years, in terms of talent, people, and kind of fundamentals of how would you want to compensate, what would that stuff look like? What would you look for? What would you 100% avoid?
Yeah, so I would typically,
And let's assume this is a just to make it a little more interesting, let's assume this is a crypto company which has got a token which is of some value.
got it, right? So,
Okay.
so here, I think the core principles of team building remain the same. You want to, at least for me, they remain the same. You want to hire team players who are really good at a few set of things, are complementary with each other, and can get the team organized to be able to make sure that their outcomes are met and are fairly compensated basis their inputs that they are able to give. Now, it's very hard to assess most of these things, most of the things in the statement that I said when you are hiring someone, and which is why it's very important to consistently and constantly be able to reevaluate these things along the way. And people should be open enough and aligned enough to be able to do that. And when you are very early, it's important to incentivize such set of people with ownership in the business as well, so that they are able to get the company to grow. So if I was starting a new company today, I would park aside some reasonable chunk of our equity to hire the first few set of people. Hire few set of people by identifying the key problems that we are looking to solve for first. Get them onboarded, get them involved, give them reasonable compensation in terms of cash so that they can do their day to day. So they're not worried about their day to day, but give them some reasonable outcome in terms of equity so that they have enough upside for the longer run as well for the risk that they are taking. Because in reality, as companies mature, what the term maturity of a company actually, in my opinion, means that that company has de-risked certain fundamental things now, and as a result, it is less riskier, and as a result, probably less volatile in what its outcomes might end up being.
No, so I think, again, let's kind of unpack what's a reasonable salary and so on, right? Like, for example, most startups cannot afford what traditionally is called market salary, and though I don't believe there is one market in India, forget in India, there's no one market in Bangalore, but you kind of measure that against, if you are not hiring young freshers or young people who've not had a wealth of experience, you are literally hiring them from wherever they are working. And your market compensation, unfortunately, get tied to what the compensation of that company is, right? So if I need to, and let's make it a little more fun. Let's assume I'm somebody who has 10 years experience. I'm a developer. I'm working in a place called Swiggy, right? Now, actually, let's take off Swiggy. Let's take a company like Grow, where I come from some financial background. I do understand I'm a developer. Make me an offer.
It depends on what role I'm hiring you for.
Yeah. So hire me for a developer role. Like I said,
if I'm hiring you for a developer role and you are one of the first few developers that I'm going to hire, whether I'm wanting to hire you or not depends on how much capital I have, what am I willing to give. But typically something like this would be typically the way we would take this is, okay, what was your last compensation? For that compensation and for this XYZ role, we think that you are a right fit. If you're a right fit for this XYZ role, whatever was your last compensation, we make sure that there is reasonable enough bump to that compensation. And then on top of that, provide you some equity because you are coming in so early in the company because you're going to take risk. That would have been one approach. The approach that we would rather take is that, okay, because we are very early, you are coming in right now. This is your compensation. We will actually give you slightly lesser, but compensate you way more in terms of equity so that in the longer run, you come in, help build out, and are able to make much more value. And the dip in cash that you are taking is a conscious choice that you are making and we are making so that both of us are aligned in the long-term growth of the company. So that's those are basically the two approaches. I would rather take the latter. And I have always seen that whenever we are able to take the latter, the kind of people that we hire are just much more into doing what we want to do.
100%. I think that's the great insight. Overall, if you hire somebody for cash, and the reason I picked these companies as an example was to just indicate that I may already be paid more than what generally is considered market or even startup salary, right? So if I need to come into a setup like that, I need to be mentally prepared to take a pay cut. And nobody's asking you to work without pay, but just take a pay cut, and there is some mechanism in which the company is willing to provide you an upside through.
Like we should think of it from the candidate's perspective, right? Like now, I think over the course of 8 years, maybe I've done 2,000-3,000 interviews.
Wow.
And hired just a few hundreds of people. Like even today, every single person that gets hired in Mudrex gets interviewed by me at least once. So
fabulous.
Hired maybe 200-300 folks, right? So the one thing that I've consistently been able to understand, it's very important to understand why is the candidate leaving the current company. Are they leaving for better? Are they leaving for more growth? Are they leaving for better economic opportunities? Or are they leaving for the fact that they really don't like what they're doing and they are wanting to work in a company that's more aligned or want to try out something else? Almost always, actually, for the kind of people that you're talking about who are well placed in these companies, for them, their Maslow's hierarchy, all the other problems are solved. So almost never are they looking for more capital. Almost always they are looking for a better place to work or a newer challenge to try out or a particular specific industry go deep into. And that's why capital is not really the only reason why people move. In fact, capital is almost always the last reason why people move from their company. Because if you're a good developer and you're not making enough money, and if you're good at your job and you're not making enough money at your current job and you love your job, if you go and ask your boss for a raise, they will almost surely give you a raise. And if they're not giving, you're not good at your job or they don't want you there. It's almost always one of those two. So,
do you people like this? Do you see number of people like this increasing? You said you've interviewed so many people, but do you see this increasing? Because traditionally, obviously things have changed in the last 8-9 years, right? Where people really want to create outcomes and they understand that if everything works well, there is really wealth to be created. Nobody's saying this whatever cut you're taking in pay is not a permanent cut. And it's almost like putting it in a risky instrument, which probably is a multi-bagger compared to, so I always tell people that, if I give you 1,000 rupees, where would you invest? And try to look for people who says they would invest in themselves, which is almost going down to the fact that, if I'm in this company and the company is giving me stock options and I'm party to that, and it's equally my responsibility to make sure that the value goes up, and I'm going to bet on myself being able to do that. So one last question, and this is more something that comes up again and again, given that the equity world and the crypto world sometimes are at odds, sometimes run parallel, and so on and so forth, right? So if you as an individual, if you had some X amount of money and you have only two choices. You either invest in a crypto or you can buy Coinbase stock. What would you do?
So that's actually, so in my opinion, Coinbase stock is a levered bet on, and let's not even say some crypto. Let's say Bitcoin or Coinbase stock.
Yeah. We can do that. Yeah.
Just so that life is easier. Right?
Correct.
So Coinbase stock is a levered outcome on Bitcoin. That's effectively how you have to look at it. And if I had the option of choosing only one, I would invest in Bitcoin because there is a larger risk of Coinbase failing. But if I had the option to do portfolio allocation, then I would probably still do 60-70% Bitcoin, 30% Coinbase.
Fabulous, man. Fabulous. Hey, this has been so much fun. Is there anything else that you want to talk about on this topic? Something that would be useful to people who are a typical audience of, who are kind of trying to understand how all of this works, especially with respect to team, employees, personal wealth, and so on. I don't know if there's anything I've missed out from your experience in the past or anything you think could add value to them.
No, I think this was really useful and we covered a lot of ground. So loved it, Satish.